very good morning to you guys. Hope you're doing well. We've got greens on all our sells. So what's happening is that the herd have actually added short. They already were massively short, but now they're adding. So we're getting to all-time highs on the indices. So it's not really a surprise, to be fair. Crypto's probably going to pump as well today. Indices. So we've got ES, 48. We've breached the big round number there, and then the Nikkei is at a 40-year high or something. It's really ridiculous. It's just pumping really badly, very strongly on the indices. So not really a surprise because there's so many bears in the equation, and they've actually added. There's more bears than there should be. So by tomorrow this needs to change because we're getting to all-time highs. They have to be getting exploded. They have to be getting slaughtered. And if they're not, and they're holding or hodl, then it's going to be very bad for those bears, and it's going to just cause them to get squished, basically. Technicals are really pumped as well. We're very strong, 84 out of 100, and that's taken into account all these instruments here. VIX was crushed, of course. It's quite boring, but it is what it is. Not really any reason for much fear, to be honest with you, because we've overcome this Middle East thing. We've rallied to all-time highs. We've rallied from the Russia-Ukraine, risk event. So, if we can't collapse from those two risk events, then we're pretty strong. The economy is pretty strong, isn't it? So, all down to the CPI later. It might come in hot. If it does, we'll be a little bit risk off. Okay, quite a bit of greens from last week. All right, so be careful. And so that's the spreadsheet, and I also look at the QDB scores. Now it is worth noting that we've got some greens on pound. Euro is quite mixed. The New Zealand dollar is fairly green. The dollar, I'd say red, or mostly. Dollar yen's obviously got a good score, so it's almost dependent on some yen weakness there. Aussie is somewhat mixed. And CAD's got a good score on average. Thinking about it, we could actually make an average, couldn't we? That might be an idea. Here we can average those scores, and then we get that. That's probably a very good idea. I'll do that after this video, and then we can just see the strength, the relative strength of that currency. That could be a really good idea. I'll do that after this video. So robot is fine. I don't want to open it because it will probably trigger some trades. We want to close it for the CPI today, but we did okay. We had a nice little profit this morning. I just manually closed them because we were in profit, and I think we could be a little bit toppy on risk going into the CPI because these treasury yields should be pumping a bit, but they're dumping, which is really weird because these should be coming up higher due to the uncertainty. So there's like a bullish formation on the Dixie, but yeah, so this red line is that B, this key level here. So that's going to be an important level. So on the Dixie, you want to be keeping an eye on 101.95. It's the body of that harmonic. Okay, so it's a key level. So it does kind of need to hold above that. If we break below, it's going to be quite bad for the dollar. So that I can't talk about the robot because if I open it, it will open some trades. We don't really want that to happen. SSI snapshot. So remember, we're on this side of the diagonal, on the daily diagonal on gold. So we know we're leaning towards sells because of this diagonal. Okay, we're just pumping. Probably a lot to do with the sentiment, to be fair. And they are short. We can see that they're short gold. So it's the reason why we're staying quite buoyant because of that, right? DAX, well, they've sold it, so up we come. Looks like we might get a crossover, so be careful. But you can see what happened here. Up we go. And I'll try and make these videos quick as well, because you don't want to be sitting here for too long listening to me waffle. But there's the sell. Up we come. Possible crossover, but they'll have to give up. You'd think they would be giving up there, wouldn't you? I mean, surely you'd be giving up at the round number. Right, that should set like panic. The fact we're above that round number there, so you think this should change. This would mean less shorts, and we'll get the crossover for sell. Okay, US 30, and they'd sold it, so it'll become. And so basically, they're just, if they're going to sell, they're going to get punished. Oops. And we'll look at gold, and then we'll wrap up. Gold, and that's it. So, yeah, this little slightly naughty, but I think this might be to do with the treasury yield. So it's possible that we might be pumping a bit on the treasuries, but there's no indication that they're gonna. The 3 month is coming up higher. The 3 month is rallying, so that might be the reason for it. The 3 month reflects Fed policy and uncertainty around rate hikes. So if this pumps, then it tells us near-term worry, and that can hurt gold. Okay, so that's probably the reason for that. The 3 month is pumping. So I'll end the video now, and I'll be back tomorrow for the video. Remember to trade safely. It's likely we're going to see a lot of stops being triggered. It's 2040 is the stop loss cluster for gold, so I've got a sell order for 2040. So we might see an irrational spike to take liquidity, and I think probably my stop's going to be 2045-ish. I'm not sure yet, but I've got a sell order in anticipation of a ludicrous spike to take stops out, and that's where my entry is going to be. Okay, so 2045 stop loss, and I think it's 2017 is the stop loss below. You can see why. So looking to sell up here to target down there. All right, and that's it. So I'll speak to you guys tomorrow. I wholeheartedly recommend forex.com and their indicators for MetaTrader 4 and 5. It's a 7-day free trial, so do have a look. There's no credit card required. You might be lacking in some sentiment awareness, analysis, and it does complement technical and fundamentals very well. Especially if you're very technical, you could be missing out on some sentiment, or if you're particularly fundamental, you could be missing out on some sentiment. This is like a sweet zone. It complements both, and it gives you a very strong bias about direction as well. So technicals are great for direction, fundamentals are great for direction, but the sentiment sits in between. Okay, and so perhaps if you're missing out on some sentiment awareness, these are the best indicators in existence in the world for that. And then you can have a look at this. You've got a 7-day free trial, and you've got your order book, and you've got your indicators, including the ratios, which are amazing. Just look at my videos on my YouTube channel, and you can see how powerful the ratios are. And you can have a look. Just take your time. You've got 7 days to trial them, and if you don't like them, then that's fair enough. You don't have to renew. But we do have a code if you want to, and it's just the QDB code, and it gives you a 10% discount, and that's it. So have a look, see what you think, and like I said, it's a 7-day trial, so you don't have to renew, but I think you'll probably find you will renew afterwards, because the order book and the ratios and the stop loss clusters as well are amazing. The stop loss clusters are great because you know where to target. Okay, that's where you take profit, where people get stopped out. Okay, and that's it. So just a quick plug for the fxside.com, and enjoy your day.